Welcome to the program. Today we'll talk about the inflation number, which comes out today. We'll discuss Donald Trump and the rally that's been going on since he was elected and whether it will last. And we'll talk about our new fund, the Switzer Dividend Growth Fund. I'm Marty Switzer.
I'm Peter Switzer.
And we're mad about money. Pete, our colleague Paul Rickard is not here today. He's enjoying himself over in
he's always holidaying.
So he takes a lot of holidays, doesn't he?
Yeah.
But first question, inflation number out today. Your thoughts on the reading, what it's going to come in at and what it will mean for markets?
Yeah, the number we should look for is about 0.7. If you get better than 0.7, a higher inflation number, I'm going to be happy. And it's kind of unusual because
You're always happy.
No, yeah, but I grew up in an environment where high inflation made me unhappy. But we need inflation to creep up. It's going to be a sign that the economy is getting better. So 0.7 is a critical one. If we do better, fantastic. It means that the Reserve Bank won't even think about cutting interest rates. They don't want to. But if the inflation number is too low, and I guess if the dollar keeps going up as well, they're going to be thinking about cutting rates. But they're scared about what it might do to real estate prices. And Louis Christopher reckons that Sydney house prices are going to go up by 15% this year, which is an outlier prediction. But if he's right, Reserve Bank doesn't want to cut. So let's hope the inflation numbers are a little bit better. It'll help business confidence. It'll help consumer confidence. It'll put the next wage rise closer to wage earners, and it'll help business investment. So this is a really important number.
Markets have rallied hard over the last 2 months since the election of the Donald, 14%. We've sold off a little bit in January so far. We're off about 3%.
An overdue pullback.
Is that the pullback that you're saying we should be having, or do you think there's more to come?
Yeah, last time I think the three of us together, Paul and I, were actually saying that the rally was so good, you expect a bit of a pullback. Also, January is usually a good month. February and March can be a bit challenging months. So we're kind of in this pullback territory. It's also the period of the 100 days, the first 100 days of Trump. If he gets some good stuff up rather than some of his silly stuff, if he gets some movement on infrastructure spending, or maybe on regulation, and maybe even some movement on tax cuts, I think the market will be really buoyed by it and it'll go up.
He's put a freeze on all employment in the public service, which is quite a pragmatic commercial decision.
Yeah, without a doubt. And I think they're going to look to see whether he's all talk or all action. The action will help the market go up. But let's face it, it can't be always Trump. We've got reporting season in the US. That will be an important driver. The Americans have economic growth coming out on Friday. That's another important one as well. And I think the overall feel of the global economy and everything that's going around could help this market either float up or just trace back a bit. And
reporting season not too far off here as well, which
is
exactly important. Now we'd like to talk about a very exciting announcement. We've launched our own fund called the Switzer Dividend Growth Fund, which is basically an actively managed exchange-traded product that aims to provide reliable, franked income streams and long-term capital growth. Peter, very exciting development the business has gone through with George Barrie from Contango Asset Management. Your thoughts on what we're doing and what sort of investors are we aiming for?
Yeah, well, we're looking for people who don't really need or want their portfolio to shoot the lights out. I've always wanted the idea of a rock-solid investment product, and it's the way I invest myself. And part of the reason why we did this is I've had friends of mine who've had a fair bit of money to invest, and I said to them, well, I'm a financial planner. You have to go through the financial planning process before we can make recommendations. And they said, no, we just want to invest the way you invest. So it was time for us to create a product for all those people who want to invest the way I invest and the way we invest as individuals, Paul, myself, and you, and all that sort of stuff. So we've put this together in a fund using George Barries' knowledge. I think George is one of the best. We've got Paul Rickard on the investment panel with me and Charlie Aitken. And the goal is to try and create reliable streams of income. But more importantly, rather than just picking the predictable dividend players, which we will we will go for the ones that grow their dividends. That I think is often harder for normal people to find. George and his team will be looking for companies that have a history of growing their dividends. And I think that means that even during tough times when markets go down, we can probably deliver a good stream of income.
And we'll be looking to pay a gross yield of around 6% plus long-term capital growth as well. So we're actually going through an IPO process at the moment. If you'd like some more information, go to switzer.com.au/invest where you can get a prospectus. We'll also be paying our income quarterly, which I think is a big advantage.
It's kind of a disruption because no one's doing this, or if there is, we don't know much about it. There aren't very many who are doing it. I think we're the first to do it in many ways, and that's going to be disruptive. And people are going to like it. Rather than waiting 6 months, you'll get your money every 3 months.
The offer opens January 30. More information, as I said before, switzer.com.au/invest. Get a prospectus, and thanks for your time.
And guess what?
We're mad about money.